All right. Good evening, everybody. I just want to quickly say hello and forgive me in advance, but I have to dart out of here. I promise I do want to hear about insurance because it's a huge issue. But I have another event that I committed to. I got to go to that. But so I'm Winslow Hasty. I'm the president and CEO of the Stuart Charleston Foundation. I just wanted to welcome you all. I want to thank our panelists. Hello, Jules. How are you? Good to see you. Thank them. I'm an introduce them, but I just wanted to let you guys know how what an important constituency you all are for us. Our easement homeowners are such an important partner with us on the preservation of these incredible buildings in Charleston. You all as owners, as co-stewards, as we call it, of these houses, we like to see it as a partnership, and that's one of the reasons that we're doing these series. We're doing a couple this year, and we're sort of piloting different ideas. We'd love to hear from you all if there are topics around contractors, around the VAR process. I know we're doing tax credits in the fall, but if there are other topics that you guys are interested in and feel like you would want to learn more about, please do let us know, because we really love to hear from you all. But I wanted you to know how important you all are to us, and you guys are really what make the preservation movement keep humming, because as we say all the time, easements are the strongest tool that we have in the toolbox of preservation, because not only do they last in perpetuity, but they really give the amount of oversight that's really needed. Not everybody has interior provisions, but we can have authority over sort of what happens in the yards and preventing subdivisions and lots of other things at the rear of the property. But we also like to be seen as a partner. We don't want to be seen as I know she's really mean, and y'all are so shaking in your boots when you get your letter from her every year. But we really don't want it to be that kind of once and done, once a year kind of relationship. We want this to be an ongoing thing. Obviously, if you're doing a project, you're going to be working with the April. But we want to be seen as a partner with you all and be seen as a resource. Obviously for technical advice, but for contractor recommendations, insurance, whatever it might be. We get it. We own historic buildings like this one and the Aiken Red House and the Rust House. So we, as owners of complicated, large historic properties, we get it. And so, we do want to be seen as a partner. So, again, thank you all so much for what you do for us and for the city of Charleston.
Thank you all. I'm April Wood, and I wanted to also introduce you to David Paybank, our board chair. And Joyce Pope is our secretary. He is again tomorrow. Introduce one of you, John Bressan, and in all presenter with Helm Risk Advisors with Austin, with our experience in financial sales and banking, and he's used his market know-how as a client insurance advisor for 13 years with expertise in coastal and historic homes. John will be talking about what's happening in the insurance industry at the national level. Jules Anderson managing member of Anderson Insurance Associates, covering the Carolinas since 1980, representing some of the largest insurance in the U.S. and recognizes the best.
Recording in progress.
Talking about insurance at the local level. And then Jay Katz is AVP Regional Underwriting Manager.
Can't hear that.
For insurance. In his role, he leads the underwriting team with the Southeast region, comprised of Alabama, Georgia, Kentucky, North Carolina, and Tennessee. He has over 18 years of professional network insurance space for both carrier and specifically wholesale side, focusing on high-end. He has specialized technical knowledge in coastal wind mitigation, especially relevant within the. Jay will be talking about tools available to help mitigate risk. So each panelist is going to give a presentation, and then we have a Q&A session. Those are small but really great groups.
Thank you all. To meet all y'all, appreciate your time. Reiterate some of the things they said. Thank you all so much for everything you do to keep Charleston what it is, and that's what brings the people to town, the historic charm that they love. And obviously, with that comes at expenses, maintenance, and then obviously, sure. I feel like insurance has been a hot topic the last few years, and been in the business for 13 years, and I feel like the first 9 years I was in the business, nobody wants to talk insurance. So you went to anybody that was just boring. Everybody sells it. Everybody's got it. And then in the last few years, it's become cocktail conversation. If you got a non-renewal, how large is your rate increase? And I think everybody's kind of been baffled by where you started, probably 2019, to where you are today. I would imagine most people are probably paying more than what they were paying prior. And that is a combination of a number of things, not just locally, but this is going to be nationally. So on the national level, the insurance market has been hit hard on a few things. Economic pressures, so with inflation, we've seen a rise in construction costs. So where the costs were to repair your home at $100,000 5 years ago, now costing $200,000, and they haven't properly allocated for that yet. You've seen a lot of price adjustment for that reason. Environmental risk, so the prevalence of all these storms that we're seeing here, the prevalence of the fires in California, Colorado, Montana, and then really a hard hit area that you don't think about is the Midwest. So where Hurricane Alley used to be this, it's now stretched to this, and where these storms used to be every so often, they're becoming more frequent and at a larger scale. So on the losses, the carriers have, tried to keep up and stay profitable. If you're not profitable, not going to be in business. So with that, there's been an adjustment of rates passed along to the consumer. We've also seen capacity changes where carriers have typically targeted certain types of homes. Typically, whatever fits that catastrophic loss model in their area. So here specifically, we would be hurricane. So we've seen a lot of non-renewals over the last 3 years. Not only on older homes, we've seen them on newer homes too. I feel like the market has started to soften a little bit as we're compared to where it was last year, but I think we're still not going to be where everybody wants it to be. So within all those changes, we've also seen carriers start to limit and exclude certain coverages that are built into their policies. So here we see a lot of water exclusions on older homes, but hopefully in this coming year, we'll see a little bit of a softening market that will present some more options. Not going to say there's going to be a ton, but I think there's going to be more than there was last year. But then there's also another issue with what insurance carriers rely on to support themselves, to protect them, during a wildfire or a large hurricane event. They rely heavily on reinsurance. The reinsurance market, essentially an investment tool for pension funds in different places. So when that's not performing and that's being hit more often than it was in the past, because the frequency of these storms, and so when they're not performing for their clients, they have to raise their rates. So last year, I feel like we saw reinsurance rates level off compared to where they were the year prior, whereas the year prior, let's say average reinsurance rates were 10, 15%. 2023 saw 50, 60% rate increases. And with that, locally specifically, we had a lot of carriers that went insolvent, not because of a hurricane or not because they couldn't pay out claims. They went insolvent because their reinsurance costs were through the roof. They hadn't collected enough premium from their existing base, so they essentially couldn't continue to operate. They either gave it to the states that they were in that can have certain funds that control that, or they sold it off to different carriers that wanted to inherit that risk. So, like I said, I do see 2025 to be in a better position than it were the years prior. Rate increases, where on last year or the year prior, 25% is where I got used to telling people we were going to see rate increases. I feel like we've gotten back to where some of the carriers realize that they're in the business of writing risk, and so why not renew all these risks? So I think we've gotten in a position where the carriers are not non-renewing anymore. They're retaining the risk, and then the applied renewal rate increases is kind of stabilized. But trying to think if there's anything else. We're going to do Q&A at the end.
Yeah,
If anybody has questions now that I think they might forget, take questions now.
Figure in the way what percentage of residential.
So I feel like, and I don't know if it was because the habit of what every agent said, but I feel like it used to be, you would say 50-50. I feel like now that number's skewed a little bit, probably to where the less people are covered for that same exposure. We have a lot of people moving here from California. I feel like the selling point to them on earthquake is a hard no. And I think that's just because they're used to what the costs are out where that exposure is higher.
And once every 200-year risk, different.
Exactly. So, no, I would say probably not as many as should. Every risk is different in how it would perform in an earthquake. Obviously, if you drive around downtown and you look around, you see the ones that were damaged in 1865 by earthquake and solid masonry, 86. No, 1886. I'm sorry, I said 18. I used to work at 1886. I should have known that. Sorry about that. But yeah, I would say not as many as should. Where obviously we encourage it the most is where you're likely to have that largest loss would be that solid masonry. We do see a lot of exclusions typically built into some of these policies. Typically it's like a masonry veneer exclusion. So it would be not any of the older homes downtown. It would be more of like a 40s, 50s built ranch that has brick on plywood. And normally you'll see exclusions for coverage like that.
An oddball question.
Yeah.
I know you, obviously you're in the business and insurance industry of assessing and protecting against risk, right? So risk is a mitigating factor in cost. And I understand that in Florida, the governor, due to the risks of failure that were associated with certain condominium structures, just created a terrible situation where the insurance rates went up on those properties that were classified either as a condo or a townhouse. And then as a response, the governor basically created a set of construction standards, actually not construction really, but to everybody had come up to speed. So a lot of those old projects in Florida, that might have been from the 80s or earlier, have to make certain things, and obviously that's to make them more safe, but also more insurable. Do you foresee a time where that's going to happen here in South Carolina?
That I don't know. In Florida, their building code there is greatly above ours. I mean, their standards that they have and what they, I think it's close to Andrew. It comes at a very expensive cost for everybody. Obviously, if you had to bring everything, like flood here, the 50-50 rule where if you do more than 50% of the upfit, then they require you to bring it up to, I don't see anything like that on the homeowner's horizon. But I know Florida is kind of the leading market for a lot of carriers and different markets that are exposed to the same risks of hurricane. So like Florida, as insurance trend goes, they kind of set the way. They were way before us as far as non-renewals, rate increases. And they have a whole lot of issues there aside from that stuff. I mean, they have a lot of third-party litigation stuff that was basically making carriers pay more than they should be paying. And so they had a lot of issue there. And I think they just resolved that recently in legislation that made it so there was none of that going on.
I have limited time. I'd like to make sure I hear everyone. Could I recommend that we make the questions after?
So, if you hear nothing else, at least from me, my theme is not all insurance companies are created equal. And it has gotten worse, due to all the things John talked about and things Jay will touch on. So what has happened is companies that you traditionally depended on or used to go to, AIG, Pure, it goes on Traveler, Hartford, all those old, what I used to call Tiffany companies that really assessed their book of business in every area and have made decisions to withdraw. And that's part of what happened in Florida. Florida created what is called the Citizens Insurance. They became the largest insurer in the state of Florida. And it was backed by the taxpayers of Florida. So all of a sudden the governor got concerned that we're going to bankrupt our state if we have so they went out and bought reinsurance. Other thing they did was they encouraged companies. I see Gene Johnson here. Gene Johnson's dad, who I used to just adore and admire, forgotten more than I'll ever know in this business. Gene was smart when he didn't follow suit, he went into medicine. So the state of Florida encouraged folks to companies to actually start up, and they were going to pay each of these startup companies $100 plus per policy to take out of the citizen, the state insurance. So all of a sudden, we have companies who started in Florida and have ventured up here in South Carolina. Is there anything wrong with that? Technically, no. When a company comes up here, they go to the insurance commissioner, file their rates, tell who they have reinsurance with, and the insurance department approves them or turns them down. The approval process means that they are licensed in the state, which means once they're licensed, if something happens and we have the guarantee fund, which step in, the guarantee fund will step in. If the company goes bankrupt and you're in the midst of a claim, they will step in and pay up to $300,000. I never want any of us to have to rely on the guarantee. That is funded by all the other insurance business. The other thing that has happened because of the market situation is companies that used to be special, like Lloyd's of London. We all would talk about Lloyd's insurance, somebody's hands or their damp feet or garments or whatever it happened to be. Well, Lloyd's of London at one point in my career was the largest insurance company, for property in the Charleston area. That's no longer the case. But when all the other companies shut down, then the Lloyd's of London. Well, they are considered, approved but not licensed. And what that means to us, if we're insured by one of those companies, they go broke while we have a claim, there's no guarantee. They step up. So it's a disadvantage. The rates are low. I mean, they're so attractive that people forget. They don't want to know the difference. And this isn't a criticism. I get it. We pay premiums on the code also. But they don't want to know the difference. And you know, what we deal with in this area is a historic issue. So you get companies that are used to doing suburbia. There's nothing wrong with suburbia, but there's a lot of difference between just sheet rock and plastic, ornate crown molding and load. There's nothing wrong with load. They're great code. But it doesn't resonate with these adjustments. They're not used to it. So they come in and town catastrophe and you said, well, come in and look. And I mean, they're overwhelmed. They look at the floor and you've got 8-inch harder pine flooring. They're used to it. I mean, whatever they're used to. So those companies are both the specialty companies like the Lloyd's or Lexington, and there's nothing wrong with them. It's just a different insurance policy than you might have been. That means it's going to cost any cheaper. It could mean that there's some limitation. So that's when somebody proposes product, a homeowners do, and say, well, the best thing we have, and I may be the one, or John, the one that says, we're presenting Lloyd's of London to. It's the best option that out of our portfolio that we could find for you. And I know the two of us will tell you the pluses and the minuses. And more minuses today than there were when I started this in 1970. Yeah, anyway. So it is, it's the limitations about water, the limitation about your siding on your house. It really doesn't happen on the cypress siding or the wood siding, but more different products. But if something is damaged on your side of your home, and if the coloring of the new product is different than the old, what company used to do in the past is just replace the whole thing. Now they go, oh no, we're not going to, because what that means to them is they're putting you back better than you were before the law. So these are the limitations that many of them that are hidden in those policies, not purposely hidden, but they're in there because companies have experienced losses more recently than the years. South Carolina started tax credit called the catastrophe savings. I brought some information about it. What you have to do is it's based on, if there's some folks who had to make the decision that we're not going to insure our home for wind. It doesn't have to be, it's not limited to wind, but say, for example, you decide not to carry wind cover. You can set up this deductible fund, label it catastrophe, also your name, catastrophe savings account, And you can put up to, I think it's 3 times your deductible in that fund, and you aren't charged, you don't have to pay tax on growth of that. That's, it's not the, it's not gonna earn you 15%, but it's, you can probably go to some of the banks and they'll pay you 4.5%, maybe, pardon me, but that's a tool you can use if the deductibles are high. And as you're probably aware, is the wind, the 3 wind deductibles. Pure wind, wind blow, named storm, or hurricane, and one of the 3. And it's sitting 2, 3, 5% more of the insured value of your home, not the loss. So what I'll close and just saying is, nobody's gonna read the policy, and I don't blame you. I don't read my health policy. So, but challenge your agent, or whoever you use, to talk to you about what's the pluses, what's the minuses of this contract. What tools can I use? Dave's gonna talk about a few of the tools that are available. I brought a brochure on a couple of tools. You're welcome to. In closing, I would say, in 20 years ago, you might ask me to write you a homeowner's policy. I had some basic questions. Maybe 10. I have a copy of what we call 4-point inspection, and it goes into real detail. And I brought some copies of that. You might want to just flip through that or begin to fill it out. If you do, what it does put you in a position maybe to get back with one of those Tiffany companies. Flood is a separated. April wanted me us to talk a little bit about flood. We decided, there's not a lot to say. We talk about flood being the federal flood insurance program. People think of flood as FEMA. It's a division of FEMA. The federal flood program is flood. And that's rising water, and it doesn't matter what causes the water to rise. It rises and that's what it's like. Back in Hugo, we had folks say, wait, we didn't have flood. The wind blew the water up into my house. And
Probably true too.
well, it is, and then they had roof damage. So you're dealing with the flood policy and dealing with the damage from up above. So there are a lot of factors, not quick fix. It's what we have to deal with. And we used to not talk about it at cocktail parties, but now I get a call saying, I was at so-and-so's house and they're insured with, why am I with? Remember, we're not mentioning any names other than Pure to protect the innocent. But Pure is one of our good companies that has a huge presence here. They've got an office in the old cigar factory moving up by the Silver baseball field. But they got what, 150, 240?
Just moved into a new office with room for 200.
Room for 200. Great place to not only have the coverage, but for really helping people. I'll sit down and let Jay give you.
Excellent. Yeah, you can sit. That's fine. So it's not all doom and gloom. I am here to tell you that the insurance world is getting better, as these guys mentioned. It has been. So we go through market cycles, hard market into a soft market, and it just repeats. And we've seen it year after year, decade after decade. And so we are seeing signs that we're coming out of the hard market, moving into, I'm not going to say a soft market yet, but As you mentioned earlier, non-renewals are not happening as much, rate increases not happening as much. Things are starting to level back out. We were really bullish on 2025 as a company, had a good 24. Reinsurance rates are starting to level out. Things were looking good. And then on January 7th, wildfire up. And that loss really shocked the insurance world. So that is not a great way to start off the year, because then it leads into convective storm season in the Midwest. So you have lots of hail and damaging storms. I'm not going to mention what season we just entered down here, but we've got that season. We've got other wildfire seasons. So there's a lot going on. And I think, John, you mentioned earlier, but we're seeing more of it. And it's more expensive, partly because rebuild costs, both residential and commercial, are a lot higher. People are building in areas that we haven't built in before. I'll mention climate change, but we're not going to talk about that as much. So there's lots of pressures on the insurance industry. And then the industry is not just here in the US. What happens globally affects even here in Charleston. So all of the earthquakes, tsunamis, anything that happens globally really does put pressure on the insurance market in the US, because we're all buying reinsurance. The reinsurers are very global. Pure Insurance, my company, we were a private equity company for up until 2020. We sold to Tokyo Marine. Tokyo Marine is one of the top 5 largest insurers in the world. So once again, it's just a global. So I'm going to touch base on ways to not only make your risk here in Charleston, but if you have another home, a little more attractive to the insurance carrier. So these are some tips. We'll start off with some of the kind of basic loss prevention. Some of these things you've probably heard of before. The first one, centrally monitored fire and burglar alarms. While I recognize downtown Charleston is a relatively safe community, the risk of break-in is still prevalent, but perhaps the more important part of this system is the fire alarm, right? If there is a fire, we want to make sure that the fire department is alerted quickly, whether you're home. All right, now imagine yourself without electrical power, right? So no air conditioning, no lights, no internet connection, no TV, you can't charge your cell phone, you can't charge your laptop. If you have an English basement like we see here in Charleston quite a bit, if you have a sump pump, now you're at risk of flooding and not being able to pump that water out. And now your fire and burglar alarm, so your security has been compromised. That's where currently installed backup generator. And we had a quick storm roll through earlier today. I got an alert. I was on James Island, got an alert that I lost power, thankfully only for a few minutes. But it does happen. It's not just during hurricane season, but we do lose power. So thinking about a currently installed generator, yes, you're going to get, most likely you'll get a credit with your insurance carrier. It's not going to be a huge credit. It's not going to pay for it. But really, it's the peace of mind. It's the safety of having power all the time. Lightning protection systems. So while these systems do not attract, repel, or even prevent lightning strikes, they do provide specific pathways for lightning to travel back into the ground, which can really take that destructive power and put it into the ground away from your house, save your home from not only fire risk, but also damaging all the electrical devices. So one thing that I love so much that I brought my own, it's called a Ting device. I don't know if anyone has seen this or if anyone has one, but so Ting monitors the electrical network in your house. So it plugs in, and there's an app. It takes about 2 minutes to set up, but it monitors the electrical network within your house for the main precursors to electrical fires, micro arcs and sparks that develop from either faulty wires, loose connections, faulty appliances or devices. The signals usually take weeks to develop over time, and Ting is smart enough to recognize when you have a problem, and they will actually help. We have well over 100 what we call saves that we have had because of, including here in Charleston. We've had a couple homes in Charleston where this has picked up what could have possibly been electrical fire if it was picked up. If you're interested in this, go to their website, talk to either one of your brokers. King partners with quite a few insurance carriers and will actually give you one of these for free. If not, $29. So it's really good, cheap insurance, especially in some of these older homes. I know the wiring has been redone in a lot of them, but you never know what's lurking behind those walls sometimes. So I would highly recommend for $100 pick up one of these devices. All right. Let's talk about the war on water. So the number one cause of loss for the insurance industry continues to be water damage, both weather and non-weather related. About 45% of all home claims are water related, with 50% of them being non-weather related. And of the weather related, typically flood, 40% of those claims happen in what FEMA has deemed low risk flood zones. So anything other than an 8 or 8. Unfortunately, water is winning, but there's things that we can do. I'm going to talk a little bit about interior water damage first. The number one, toilet supply lines. This is so easy, it's cheap, it's a simple fix, but these should be replaced every 10 years or sooner if there's visible signs of corrosion or wear or leaks. We recommend steel braided lines, and if you can, get the one with the steel baffle, not plastic, because every time the plastic becomes brittle, it can crack, and now you have a leak. Water heaters are another big cause of water damage for us, whether it is your traditional tank water heaters, which should be replaced every 8 to 12 years, or tankless, they can last a little longer, typically 15 years, maybe longer with proper care. Regardless of what type you have, we do recommend annual inspections, just to make sure you don't have any issues with them. And then when it's time to replace them, avoid putting them in places above living areas. Instead, maybe consider if you have a garage, if it's elevated, if you have a mechanical room, or even mounted. Automatic water shut-off devices. I don't know if anyone has one. I have one and I love it. We highly recommend these. These are devices that connect to your main water line. They've gotten really smart over the years and they've learned your habits. So they know the difference between someone taking a long shower and a true plumbing disaster. And why we like them is because it does what it says. It automatically shuts off that water, whether you're home or not. Shut off the water. So if it is a problem, rest assured it's cut it off and hopefully minimize. And then finally, deferred maintenance. We see water intrusion from older roofs, from clogged gutters, HVAC units, specifically ones without a float switch. If they haven't been serviced, it can cause water damage if overflows clogged. If you don't have a float switch in your HVAC fan, that's another. All right, let's talk a little bit about flooding. So, we can't control the rivers, the harbor, we can't control when it rains or how much it rains. But we can do a couple things to mitigate our loss. So if you're building a new home, make sure you elevate the home and the mechanicals as high above base flood as you can afford and as much as you. If you're renovating existing structures, I know not always feasible to lift the house, although we have seen quite a few homeowners down here start lifting the home. But certainly making sure at least your mechanicals are all above base flood. I stress the importance of mechanicals being elevated because of this picture right here. So the whole neighborhood is surrounded by water. If water, especially salt water, gets into your mechanicals like your HVAC system, it can cause a short and spark an electrical fire. And now we've got a burning house with no way for fire to get there, fire department to get there and put it out. So if you're replacing mechanicals, please try and elevate Flood prep has also come a long way. You know, sandbags are not our only option. There are products out there like Aquafence and others where you can actually build a barrier around the lower parts of your home and your property to help keep flood waters away from you. And then lastly, if you have a lower level or any kind of basement, resist the urge to build that out if you can. You know, we see a lot of people put in maybe wine cellars, and so now we have the risk of your wine collection flooding or movie rooms or home gym. So try your best not to build down there because the flood can be gone, and that is not going to be covered by your primary flood. Okay, so perhaps the first peril that comes to mind when you think about insurance in Charleston is hurricane. And I apologize if this picture triggers anyone, but that is Hurricane Hugo bearing down on South Carolina. So if you're renovating an existing home or building a new home, again, build to code or better. So use clips or wraps on your roof wall connections, install impact glass or shutters. I understand that's not really an option downtown at the moment, but if you have other homes, that's certainly something that you want to think about. Roof materials matter. So using the proper nail size and spacing for roof deck to attachment, installing a secondary water resistant barrier. And this is actually another layer that goes underneath your primary covering, whether it's shingles, plates, metal. And so if the primary covering does become compromised or even ripped off, there's a secondary barrier there that will help prevent water intrusion. Again, a lot of insurance companies will give credit for that, so we'll recoup a little bit of the cost. Have an arborist do an annual inspection of your property just to make sure that your trees are healthy, have them cut it back to your house. We don't like to see trees touching the house or even really overhanging your house, but we want to ensure the health of the tree so that if a storm does roll through, we don't have a tree branch. And then finally, have a plan. And so if this home is not your primary home, definitely make sure we know who's responsible for things like bringing in your outdoor furniture or deploying shutters if you have them. I would also say make a home content inventory. So make sure you have a list of what's in your house ahead of the storm, because once the storm rolls through, that's not really the best time to try to sit down and remember what was in every single room. I know that this can feel like a daunting task to do a content inventory list. So one easy trick, we all have one of these, put it on record mode and walk around every room of your house and record it. Have it right there. Lastly, please don't forget about your cars. If you can, move it to higher ground. We saw a lot of flooded cars, recent events here in Charleston, Hurricane Irma down in Naples, Florida. It was mainly a vehicle event. The insurance industry paid out billions in flooded cars. But once a car is flooded, it's gone. There's nothing to do about fall water. So from a sustainability of the insurance industry, we as the carrier and as brokers, we want to support and guide and provide risk management rather than just making coverage changes that you talked about or increasing rates. That doesn't help anyone. You know, there's only so much we can charge and there's only so much we can restrict. And again, at the end of the day, your insurance carrier wants to be there for you. You want to make sure that you're covered. Improving the resiliency and insurability of homes along the South Carolina coast, not only important to us as insurance professionals, but also as fellow Charleston County residents. We love where we live. We want to live here, and we want to make sure that this is sustainable. So this is my family. I always like to end and throw them up there. I met my wife here in Charleston. My boys were born here. I've been a James Island resident since 2006. It's really been my pleasure speaking to all of you today. I hope you took away maybe one tip to better protect yourself, your homes, and thank you. Questions?
Question for all three of you. We have a state insurance commission, correct? That department oversees companies for coming into the state. They license them for our program. Do they have any control over really analyzing companies versus utility companies? Utility boards get to look at the books. And if Dominion says you want to increase, board might say, justify. Insurance companies don't, that's my knowledge, I mean, checks and balances. Insurance commission, team set up in Columbia and said, okay, well, you know, Travelers is a good guy, we'll let them in, we got this guy from Miami, plus the home insurance, we'll let them come in. But who looks at
Sure.
the company when they come in and say, and the rate increases, unfortunately, they don't come out like Indian, they don't say, okay, we're going up statewide 25%. Individually, so it's a little more subtle. Where is the insurance commission? I mean, he is a person who is technically supposed to protect us.
Yeah, I think there's a lot said there. One is when companies come in, and the other is around rate increases. So there's a couple things when with companies, there are different AM Best for rating. So there are other companies that do look at their financials, and so like my company is an AM Best A. And again, we're backed by Tokyo Marine, and I don't know if you want to touch on a little bit of that, and then the rate increase. I guess I'll start there, just from the company side. So we are an admitted carrier. So our rates are filed with the state, and any increases we do, we have to go through filings. This is in every single state. Every state is different, and they do scrutinize our filings, make sure that we show them why we need. It's called an indication. So we might say, hey, we have an indication in the state that says we need to take 25%. We're going to take 9 this year, or whatever we decide. Then there are companies like Lloyd's of London on the excess and surplus side, where they don't have to file their rates. And I don't know if you want to talk about that a little bit.
AM Best is the Standard and Poor's of our business. They rate something like 19,000 companies. They look at exposure that they have in Charleston, as well as the exposure they have in Arkansas, and Mississippi, and Washington State. And then they look at their assets and, you know, do they have good spread of risk? Do they check their reinsurance? They really put a company through the ringer before they give them a rating. There's another company called Demotech. And Demotech came in when these Florida companies wanted a rating. And the criteria is not as stringent. If it's a Demotech rating company, we had a CEO come visit the area 20-something years ago. We had one of the companies in the portfolio, and so I said, can you tell me, what's the difference? Well, he didn't want to go into all that, and I don't blame him. But he said, AM Best makes sure that company. Years ago, Blue Cross Blue Shield had formed a property and casualty company, and they wrote mainly workers' comp and then commercial, personal. But AM Best would not do it. And they were quite a lot of business in Greenville. But to answer specifically, as Jay said, you present your situation to the director of insurance. They have an analyst who go through and check and do as much as they can on the surface. And then they depend on AM Best or and they have a network of insurance companies. They check, they've got a lot of ways to check. our insurance commission, we had about 3 years ago, had a real seasoned insurance commissioner, been in the business for 40 years. President of the National Commissioners Association. Really knew the good and bad, and this individual now is equally as good. He gets a lot of pressure from the legislature, because whenever rates go up, whether they're here, Myrtle Beach, Goose Creek, wherever, people start calling the legislature. And they want to run in and tell the director of insurance what we should do. And there's been some discussion about spending. We have what we call the South Carolina Wind and Hail underwriting. It's not state, it's statute. Licensed carriers like Pure. They basically, the pool, out here Wind and Hail Pool, is a partnership with all the licensed carriers. And so if there's a loss, they don't have enough coverage and reinsurance to pay it, then they knock on his door, say, you owe us $14 million based on your payment. But that happened after Hugo. Some companies just weren't aware, and they got that knock, but they never came back. But it's a limited area. Downtown Charleston's not, use the pool down here, in the peninsula. And there are a lot of areas, it's not very scientific way to use the pool. That when we try to get them to expand the pool, when the market was really tight, they wouldn't do it. The board, consumers, a couple of insurance agents, a little bit company. He does the best, really the best job. I wouldn't be in his position. The worst thing that can happen is somebody who wants to use this as a stepping stone. They come in and then they start really having. It's a lot of exposure. He or she, that's what he did. Maybe give you more information.
I was gonna say, on the rate increase on the admitted side, it's not typical, the commissioner's gotta approve the rate. It's not typically, here's 25 across the board, they'll approve them for an allotted amount, and then their job is to control where they're gonna apply that, and fortunately, they're gonna apply it to the more prone areas. But, you know, his job is to protect the consumer and making sure we're not having an arm and a leg for no reason. However, you know, should be happy, you know, I know nobody wants to hear rate for a good thing, but, you know, in the newspaper, I think like a week ago, they were praising the fact that Florida, and I'm sorry, California, State Farm had gotten 17% rate increase. You know, for us right here, that's been the norm. The commissioner there is so difficult and non-business friendly that they've created an environment for these carriers that say, hey, look, we've taken loss year over year for all these wildfires. We need to apply a 60% rate increase to be profitable. He's saying, no, I got to protect the consumer. I'll approve you for a 10% rate increase. So that's why in California, that whole wildfire disaster, and everybody's saying, well, State Farm pulled out of the market. They all pulled out of the market for a reason. And it was typically because the commissioner wasn't allowing rates to be provided to the carriers, and the carriers' only thing they could do is they could just say, we're going to stop writing business. They're required to write business, they got to write new business. And so their only option is pulling out the whole state. So that's why Farmer, State Farm, AIG, you name it. Be glad that we're here kind of with these rate increases. They're not great, but they're necessary to have the amount of carriers we need in the marketplace. Because the last few years, you know, you don't really have a marketplace carrier. You really need some sort of competition out there for people to create an open.
And that's why the commission has approved many of these companies that come in other states that aren't quite as substantial as the one created by the. I say that I represent some of those companies. And we encourage them to get a best rating. But it's not in there.
Can y'all speak a little bit to, alternatives to the NFIP flood insurance? It's gonna, what that market is like.
Well, years ago, well, up to say, maybe 5 years ago, you could only buy flood insurance from the NFIP. No standard market would write it. There's one exception to that rule, but basically, none of us could get a policy written. Now there are a number of companies that have figured out flood. What has happened is the industry does modeling. They have become so sophisticated with satellites, drones, that they now know what they can insure, and they know whether the home has been closed underneath, whether the HVAC system is on the ground. They got more data. So these new carriers, they're new to the flood market, have they carved out what they want, both on primary flood and excess flood. There's a federal program, you can only get $250 on your home, $100 on your contract. So you can buy an excess. You could do that all along, but there are a number of carriers that it's worth it. In fact, I did my own house the other day, a standard, write your own flood policy. I've been with them for years, and I said, well, I think I'll try. And I saved $900. So there are other avenues to look at. They typically either use the federal forms or they enhance it. They might give you replacement costs where the federal flood might not, or they might give you what we call loss of use, where if your home is damaged by flood, you got to move out. The federal flood program gives you no coverage to live temporarily. These markets, they could do.
I think one of the big issues is that the NFIP has not been charging adequate rates for so long. So private markets didn't want to come into the market because they could not compete with the NFIP pricing. That program has been upside down for a long time. It's been subsidized by all of us. I mean, they've been putting billions and billions on their books and collecting millions and millions. So when there's an event, they're upside down and they're going to the federal government. They're asking for a deficit. So they've revamped how they're pricing, and unfortunately, that means our flood insurance rates are now going up. But that is bringing in some private markets to hopefully and offer broader terms, maybe more competitive pricing, maybe higher limits, some loss of use coverage. So I think it's going to be a really interesting space for the next 5 to 10 years. I think it's going to get a little better.
The government used to subsidize a lot of, especially this area right here. Most homes built before 1974 didn't have any building code that said got to be built X above base flood. Didn't exist, so they pulled everybody into what they call pre-farm subsidized rates. So where this home here was paying 500, the next home's 500, the next home's 500. Private market now probably makes up 4% of the total flood market, where the government was 100 5 years ago. The private market started using the technology that exists. So I always say Google Earth. I don't know if it's Google Earth, but it's some sort of technology like Google Earth that picks up the individual building it's dirt around it, so it can look at topography, all these things by satellite imagery. They can say, well, we like this one, but we don't like this one. And they show us that based on their pricing. The government program finally switched, 2 years ago, to where they're individually rating each risk. So where this home and this home and this home were paying the same thing, now it could be, well, we can tell this home is 1 foot below that house, and so this one that's 1 foot below is gonna pay more. This one makes perfect sense, right? It could be paying the same rate if you're not as much at risk. And that works through in even like newer neighborhoods that are built up to code. In the federal government program, if you're this high in the middle of the neighborhood, but you're this high in the edge of the neighborhood by the creek, this one's gonna pay more than this one. So I think the government's finally shifted to that program, and I think it forced the private market kind of coming in to really help them with that. And I think as a consumer, flood market, a homeowner market, where you have people that are, figuring out what risks are right, and, every homeowner's taking every risk, so ideally the same thing would be with flood. And I think the government's gonna somewhat force people into a private market, the annual increase rates. So I think, they're capped at 18 or 20% per year. So if you're at $800 on the grandfather rate, well, you're probably never gonna find a better option in the private market. But private market would be a good option for some. I've done some downtown through a market called Neptune, but it's very specific to the areas like kind of an upper crad where it kind of starts to get high. So things that make sense to the eye, obviously it's making sense to the carrier when they're visually looking at it.
Well, thank you. We gotta go. 24 years ago. We got there. 46.
So we have Thanks for celebrating.
A follow-up, different question, in the cocktail party, I've heard more than one person say that they're dropping the wind cover, just buying all the other, risks. That something that y'all do.
Well,
And mortgage companies probably require wind, but there's.
It's a very specific type that doesn't have requirements from outside parties.
and some mortgage companies are. It's because of the number of mortgages, they may not catch it, but they usually just want to see a policy with the limit. But it's a growing, people say, well, my family lived in this house for 70, 80 years. And the wind has never damaged the roof. Or we've never had water on the inside. The standing seam roofs are very good, but they gotta be, maintained. You gotta seal the what do you call it, where it cramps. You gotta seal that, you gotta repaint it. And companies, used to just kind of turn the head on Charleston and let us do it, but now they want pictures, or they use satellite. They have become more sophisticated than I've ever seen them in their review. The feeder line, we have some companies that when they go into an inspection, they find rust, and it have to be metal. They send out a notice of cancellation. So they replaced it. The owner replaced it. We took new pictures and we send it. But I mean, hot water heater, if they're over 15 years, they don't want them.
I think to the question of self-insurance, especially for the wind, I always say that's a conversation for you and your wealth advisor, right? If you feel that you can sustain that hit, right, total loss, then that's up to you. I don't like that. I'd rather look at higher wind deductibles or other ways to try and bring that premium down. But we have seen more and more people, hate to bring up Florida again, but down in Florida, there's probably more and more people starting to go that route just because that cost does start to go up. So they say, okay, if I'm paying $250,000 a year for my wind premium, and I've got a new home that's, built to code, and I feel like, well, I'm going to take that money back to the road.
I just said, what people don't think about, they focus on the roof. If it opens up, comes down, there's no coverage for everything below. So they think, oh, well, I thought I excluded the wind on my roof. No, it means nothing.
I don't think it's for every property, but there are some, that are locked in between homes that are solid masonry with, brand new steel metal roof, and they had a premium at 20,000, and all of a sudden they're at 90,000. They're all 4 million in coverage, but they have 5% deductible. Well, 200,000 out of pocket before you kicked in. You kind of just break it down for them and say, okay, well, you're 80, we can get you to 10 without wind. You want to take that, or had some that are like, yeah, I will take that, and I will self-insure it. They'll point out, well, I'm already self-insuring because I have a $200,000 deductible. To his point, not just the roof that can come off, it's the interior that can be damaged from it. I think it's not happening as often, but I think the question about it is happening often enough to get people thinking about it. Okay, like, do I want to be spending this? I think normally when people ask it, and they were spending 20, and now they're at 35, and they realize the excellent is 15. They're like, okay, but I think it's more for your 80 to 100,000, and you get it down to 15 without the wind, and you're like, okay, I'll just take that savings, I'll put it aside. That will be my catastrophic account for the loss that ever occurs.
And it's that, what it adds to is that cost of construction. I don't think they would mind me telling because they're both gone, but Hawks, Dr. Hawk, Nancy live on the corner of Beatty and South Fabric. I don't think that's number one. It's on the other side. It's on the number two. So Hugo, right, they have a slate roof. A number, it's the largest roof ever was involved in this payment. And I didn't pay, obviously, but it was a $80,000 pad back then to replace that slate roof. And most of us have no clue that. If you ask a contractor, I know this is an exception, but POR, what do you think per square foot would be? Well, I don't quote anything less than $1,400 square foot. That doesn't, most of us go, that doesn't make sense. How does that happen?
This is the hardest stuff to gauge because it's not built anymore. Nothing like this is built anymore. So they're saying 1,000 or 1,400 out there. Imagine that's going to be more than that per square foot.
So I kind of came in, your mom's stuff I have no control over, but having an easement on top and Mr. Charleston having say over that, how does that affect insurance? How does that affect question? That's kind of the one thing, because when you talk about they have the satellites and they're looking at this, that, or do they also look at the interior? House space. And it never floods, it never had. When we go in there, we check it every year. We've been try to keep it 1809. So, do they look at it? Can they see the the structure, what's in there, and what we do to maintain it year-to-year basis. And take into account that the homeowner is there to. That is maybe considered.
I brought a form, just for you to look at, but it's what companies now want to know about an older home. They do want to know that up front. All the things that you do done well, they want to know about it. They're not going to send one another inspector next year. What usually happens is stay with that company till something causes you to move, whether it's a raid or something. Then the new company looks at it. They don't look at that home, what it looked like when the first company looked at it. They look at it where it is now, and then any home gets wear and tear, even the main, but they would, and y'all add to this, y'all, I mean, they would notice that you take care of it. There's no mold, there's no water, or, so they do know that, but age plays a factor, companies' appetite. They're just some companies, if you say I've got an easement on the facade of my house, I mean, it's farm. They just don't know what to do with it. So you really need to have that discussion.
So I wonder then, if the person story, if there is no ability to talk to state.
Yeah, I think it comes down to each specific carrier, and I think there's some carriers, say ours, that listen to the story, and I think that's why you need a really good broker, you guys, to convey your story to the insurance carrier on what you do and why your house is so well. We do send out a risk manager who's going to do an inspection and take photos and talk to you and learn a lot of this information. But yeah, not every risk is created equal or maintained equally in those that should be supported. I'm a little biased though, because our company structure is such that it's a member and company change, and so it really is a club, and we make sure that we bring in best of the best. I mean, when we were founded, we said we wanted to write newer, bigger, better build, right?
Going through the same insurance stuff. And it's. You're laughing.
I will say, yeah, I will say on the easements, and I don't know how much on the interior easements pertain to the wood floors and how they need to be put back. But just going into one of the mitigating things he mentioned, he already talked about water loss as being the largest thing. You know, that team thing and saving, or not the thing, the water cutoff thing, the number of just mid-market homes like myself, where you would think a wash machine leak from the first floor down to the second floor, you're like, oh, that's, you know, 10, 15,000 of damage. Also, you're like, that was $50,000 of damage. Inside some of these policies, he mentioned these limitations. The big one to look at would be, is there a water limitation? A lot of carriers, especially on the older properties downtown, especially carriers like Lloyd's of London, have water exclusions that say, hey, you got 100,000 max for water loss, or sometimes 25,000 max for water loss. Those get exhausted very quickly, especially if you have, you know, old wood floors that need to be put back the way they are. You know, some of those water limitations could kind of put you out of pocket a little bit more. So that water cutoff device that he mentioned, I've mentioned with so many clients that have these losses. And
I have
peace of
one.
mind that they have.
I have one, but they put it in the wrong place.
I know.
Yeah.
I would.
You gotta make sure they put it in the right, on the right pipe.
Some of the plumbers don't like it, but I would say that there are plenty of advocates. But an insurance company, even the direct insurance says, I'd love to help you, but you know, this is a business and we can't tell them that you've got to, you know, honor the easement, put it back the way it was before the loss. They can make sure that if there's any legality to the easement, that they will honor that, especially if it's on the deed. But it's just very difficult for the director or for any organization to go to company. Then you gotta do it this way, you gotta protect us, there's so few easements that you just have to have, honestly, you have to have the kind of company that recognizes and values what you've done to your home, the east there, the place. So, and there are a lot of those companies left, so be careful, and I would say that to any of us, just be careful who you do this. Yeah. Oh.
Well, I guess.
Functional replacement cost is another one.
Yeah. There's something though, that, I mean, there's something, yeah. Red letter thing. Like maintaining their house well, or is there something that we could do to help?
So I just don't think that will provide the inherent fix that they would want, which would be, you know, the hurricane straps, the hurricane windows, or the engineered shutters. And a lot of those are just restricted with that. I think those would be the biggest thing. But I don't know that the carriers are just gonna say, okay, we have a small set of property.
Yeah, I mean, the hurricane portion of the premium that you're paying is what's driving. But you know, there is the AOP, the all other peril part of it, and so the companies do want to see updated electrical, updated plumbing, updated HVAC. So as you do those things, definitely make sure that your broker knows, that the company knows that there is credits or maybe even a better company that you're eligible.
You know, it's part of the time.
Probably a letter that, saying the easement is there, asking the company to accept that letter. See what their response is. They may say, well, that's fine, but it doesn't change how we have our laws. But at least you know. But it's much better to find out now than after the law.
I would say some of them will take it and they'll write in what they call functional replacement costs. Unless that's explained to you, you don't know what that is. That's kind of the analogy he gave where you have this ornate crown molding, and if you have a loss, you're gonna get blows molding back. Those would be situations where you'll have easements that I would be concerned as a homeowner having that, you know, that okay, if I have this fire, it's probably not even be the hurricane that causes that loss to the mantle, but the fire could. And you're on functional replacement costs. They're probably gonna say, well, we're gonna give you a wood molding fireplace back and you're out of pocket the rest. So that would be one thing I would suggest also look at.
I had one little X-22 neighbor, insurance company told us that we had to have plywood set all the windows. Fourth floor had, that was one thing. The requirement, where you have to have it. We were talking a little bit maybe about building code. The builders have fought over the years not to have to implement some of the that are, building practices, because it makes the cost of the house go up. And, so it's been a battle over the years, trying to get hurricane impact glass. We use, I call it water and ice shield, but that's, remember how most roofs used to have the black tar paper and then they put the shingles on? Well, now this is there's colors, but it's adhesive on one side and they roll it down, then they nail it. Well, insurance companies look at that as 2 layers of protection. They'll give us, some companies will give a credit. So it doesn't blow off like the big sheets of tar paper. So none of this is easy stuff. In our budget, most people don't want to have to do it. But it's the only way to address the issue. And we were talking about maybe in the newsletter, doing maybe a little checklist of things that you might want to look for or think about as you live in your. We'll do that. We'll work on the 3 of us will give you some stuff.
Thank you.
And I'll leave some of this stuff up here, which is one of them is called water cop. It's that cuts off the water. But if you do have to replace your hot water heater, go to the tank. That's the new deal. It's not new anymore, but that's insurance companies would prefer that. That means you got to be gas. But some of the biggest losses that companies have paid is the hot water heaters on actually the 4th level, the attic. Folks go out of town, the water breaks. Then, about 4 or 5 days later, the neighbor sees water coming up the driveway. Are y'all home? And mold issue, there's so many factors. The American dream of owning your own home.
Thank you all very much.
Yeah, I'm saying the meeting.
Yeah, thanks for doing that.
We'll send out a follow-up. Their contact information. And help yourself lunch. Oh, and our next event is here. We'll be presenting with Brittany Lavelle about relocation.
Yeah, we have a good thing with that, but I've heard the name often, and I was actually just my father-in-law who was saying, like, where you going? I said, next door. Yeah. Very well. John Brad. Really?
We're trying to sign it.
Yeah. They have played it all. And what they. We have really good. And not. And that's the care. Well. They actually. They can replicate it to look, see, that's the stuff they can shape that. Yeah, I think. They're very detailed. That was for the, but you know, yeah, that's the time. Early registration period. Yeah. For your. For your. Easement. Yeah.
All right.
Yeah. It didn't. Yeah. Yeah. You know, which can help.
Yes.
Value that we like. Oh, yeah. I know.
Yes.
You know, like.